Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, April 30, 2015. Inside the numbers tonight, we're going to quickly review one more time the Widowmaker and Yelp. We're going to talk, and the Widowmaker, for those of you who don't know, is natural gas. It's another name for natural gas. And when we talk about it, I'll get into why it's called the Widowmaker. SPY in the E-mini contract, crude oil, gold, interest rates in the bond market, and the U.S. dollar. And let's get rolling. Okay, that's win. We don't want win. We want the SPY. Actually, no, we don't. We want, let's see, we want first natural gas. Okay, remember this trade, okay? I'm going to go to the daily chart first, if I can get there. All right, and then you'll remember that right here, I said, how do you potentially pick a low and trade it effectively without going broke? Essentially, how do you pick a low in the market? Well, sometimes you have a good risk reward, and here we had a good risk reward. You're at the lows of the chart, you make a doji candle, okay, and what you can do in terms of risk reward is you take the trade here and you put your stop below the low. In this case was 248, below the low. In terms of a close, a daily close below the low of this day here, this candle here, and then you can basically ride it up and trail your stop until you get stopped out, and that's the proper way to take a trade. Okay, so what happened? One day up, kind of confirmed that the low was in. You definitely confirmed the low was in here, and today you just went up like a rocket. They lit a fire under natural gas, and you went right into the 50-period moving average, and that was a huge trade. I mean, from down here, that in 3 days, that is just an enormous trade, and that's the benefit of understanding how to pick your spots in the market. You know, hope is not a strategy. The analysts aren't a strategy because winter's coming or summer's coming or whatever's coming. That's a reason to take a trade. That's nonsense. It's all about numbers. It's price action. It's money flow. It's mathematics. It's numbers. That's it. Okay. All the rest of it, they can have it. They can have all the rest if I can have those things. Okay. I'll win every single time. Let's go to Yelp. The other day, I told you, before it happened, I told you that Yelp was setting up with an unbelievable head and shoulders pattern. I showed you this. Target, oh boy. Okay, and what happens is, and really quickly, I'll review the head and shoulders. So here's your head, here's your left shoulder, here's your right shoulder. Your neckline goes from where these two meet and make a low, okay, or 3 points make a low. And what happened was, we rallied back to touch the underside of that trend line. So again, knowing where your price levels are, your risk reward was unbelievable. Okay, your risk was a close below, a weekly close below. So by Friday, a close above this line, and this pattern was off the table. Okay. However, if this line repelled price, okay, you were going to get a decline. Now, Yelp had earnings last night, so anybody that plays stocks into earnings, that's certainly your decision, but it's nothing more than a gamble majority of the time. This time it would have worked out, but you know, you could have easily, on some kind of positive news, went up and filled this gap up here at $56, $57, and that wouldn't have felt too good from 51. But in any case, the point I want to make is knowing where the patterns are and how they succeed and how they fail, and the price action tells the whole story. Mathematics, numbers, that's all. That's all you need to know. So Yelp played out just an unbelievable trade. And by the way, if you go back to the weekly pattern, this is just getting started. Now, you're going to have bounces and you're going to try and rally back up to $50, and I get all that. But in the end, when the market gets extremely volatile and we do finally correct in earnest this year, then Yelp is probably going to find itself at $20, $25, $30 and lower. So watch out for this one. This is not a stock to try and pick lows. Forget Yelp. I think it's a scam as a company to begin with. That's what I was told. I've read, so I shouldn't say that. I don't know for a fact. I don't really know them. All I just know is the stock chart looks terrible. Okay, so let's get into the charts. Let's get into our normal stuff. Let's go back to the daily chart, SPY chart, and what we have is we actually came into two different support levels today, right? We had a pretty bad day in the market. They took them out behind the woodshed, okay, and it was weak all day long. And on a day like today, you know, when it's weak all day long and you have things down like the broker-dealer index getting whacked, the transports getting whacked, the NASDAQ getting whacked, the S&P, everything under the sun, the IWM, the Russell getting whacked, you need to just be aware that majority of the time on those type of days, unless you see some kind of a definitive bottoming signal during the day, they're just going to be lower prices throughout the day. Okay, so let's go and check it out. So here was yesterday, right? I'm sorry, this is an hourly chart. Let me go to the 10-minute chart, okay? So on the 10-minute chart, this is early today, 10:30 in the morning. We come right into our level that I provided you, 208.97. We hit a low of 208. I can't get it. It's unbelievable how that little pop-up always pops up. I can't see it. Anyway, it pierced it by a penny or so. So basically that line played out obviously perfect. Look, we hit it, bounced up, hit it, hit it, hit it, hit it. We hit it 1, 2, 3, 4, 5 times and bounced up. Tell me that's not good support, okay? So we hit it 5 times. So we basically hit it for an hour and then bounced up. And the market came close to this gap window up here and then rolled over again, hit that line again, 208.97. I mean to the penny, okay? How good is that? And then bounced up, and then we rolled over, and finally it couldn't hold. After you hit it 1, 2, 3, 4, 5, 6 times, I mean, you shouldn't have even bounced up the 5th time, but it rolled over, couldn't hold, and then where did we go? Let's zoom out a little bit. And we started heading towards the next level of support, 207.50. I mean, isn't it great that you have these lines in there? I mean, you should write these down, okay, during the day. If you're a trader during the day, you should be writing these levels down because these levels aren't made up, folks. These are real levels. These are real levels by a real trader. I mean, this is not bullshit, okay? These levels work, all right? So 207.50, you didn't quite get there, but you got to 207.62. And bounced up a little bit at the end of the day. More downside to come. There could be tomorrow. Certainly could be tomorrow. Now, here's the interesting thing, okay? You have conflicting information ahead of us. Now, here's an important thing I wanted to go over with you. So, you have a daily cycle bottom tomorrow, plus or minus 1 day. So it could happen today, and it could happen Monday. That's in the S&P 500, a daily cycle bottom, okay? However, okay, you also have a seasonally weak period of time between the 1st of May, or right now, into, let's say, anywhere from 10 days into May, plus or minus a couple of days here or there, okay? So what that says is you really have polar opposite things working. So I have to see the price action to make a decision which one's going to win. Okay, so here's the way we're going to play that. I'm going to go over to the E-mini contract because you know that's where my real numbers are. Okay, I'm going to move this line up. Okay, and I'm going to put it at 2089. Okay, why? Because 2089 is going to be the line in the sand in terms of a daily close to be bullish or bearish this market, all right? Right now, it's in a weaker position, all right? It's in a weaker position because we closed down below 2089 today in the E-mini contract. Let's zoom out a little bit. Let's see where we are. Whoops, lost my thingamajig there. Okay. Let's go to the daily chart, all right? So, now, you know, if we don't get above 2089, we're going to come down and we're going to test this 2055 level. And if that doesn't hold, then we could come all the way down to this 2020 area. That's a ways down there. And if we're going to do that, it's going to happen relatively quickly, meaning if we can't recapture 2089 by tomorrow or Monday, then the other thing is playing out. and we're probably going to have a week or so, maybe 10 days of downside pressure on the market. If we recapture 2089, then that same force, that same pressure is going to be realized on the upside. So it's pretty simple. 2089 is your line in the sand. All right. You should just write that number down because 2089 is very, very important. Other stuff I have on the market today, the IWM was weak. I mean, it was down almost, what was it? Almost 2%, 1.8%. That's pretty strong. I mean, that's whacked. All right. So, the IWM is weak. The S&P is weak. We have a daily bottom and we have a seasonally weak period of time. So, we're going to let the price action and the market tell us what to do. From here, you don't guess, well, I think we're going to go down, so I'm going to buy puts, or I'm going to buy short, or think we're going to go up, so I'm going to buy long. We just wait for the market to tell us what to do. You may not catch the whole move, but here's the deal. Okay, the move that's going to happen probably over the next week or two, whether it's up or down, is probably going to be 50 to 60 points in the E-mini contract. All right, it's going to be 50 to 60 handles in the S&P contract, give or take, and it's going to happen quickly, and then we'll settle out, and then if it's a low, we're going to catch a bid again and rally up, and if it's a high, we're probably going to then have a correction. So we'll have to wait for the price action. We'll wait for the market to tell us what to do. Gold. Well, nobody should be surprised that gold was down today because remember I was saying we have another mini ABC pattern developing, right? We had the A, we were looking for the B, and I said the B should find support at 1195, and it sliced through there like a hot knife through butter. So that was no good. So forget that line. That didn't work. See how often my lines work? They work a lot, right? But sometimes they don't. Nothing works 100% of the time. You just need to be aware of that. So whenever we're either taking a position and we think we have a good price level, remember, knowing where we're wrong is just as important as knowing where we're right. Okay, it's as important as knowing what price level to take a trade. We have to know where we're wrong. Okay, so if I did take a trade at 1195 today and the market kept going lower, what do? It was wrong. I got to get out of there. It was wrong. Now we'll find support. Okay, and we didn't even get down to this low here, so we definitely found support. Now we'll have to see if it holds, and we'll have to see what the market's telling us it wants to do. Does it want to move higher or does it want to move lower? If it wants to move lower, you're first going to go to this double bottom at 1174. We know that number from before. And then if we go lower than that, you're going to get down into this area here at 1150, 1155, 1160. That's no good. You don't want to be long into that. Okay, so we'll have to see what happens over the next day or so on what develops in this market and what the market tells us what to do. GDX, same routine. It was down 3% today, just ugly. Same thing. A, is this the B? I mean, you're still inside of this candle here, which is positive. So that's good news. So if you want to take a trade in GDX, if you're a aggressive trader, okay, you can take a trade in GDX right now against the low of 1988. All right. So you can stop out on a daily close below 1988. You can be long GDX. Pretty much that simple. How much upside are you looking for? Not much. You're only looking for 21 to 21 and a half. So, there's $1 in there. If you want it, take it. It's up to you. Let's go to oil. Love oil. Check this out. I mean, this is just beautiful. We mapped this out, started making the chart look pretty, gave you support levels, should be long. We know as long as we're above this line, closed above 58, all the prerequisites were there. Everything was there. You don't need anything other than somebody banging you over the head with a hammer to take the trade. I mean, everything lined up. I don't know what else I could have done except jump up on the table, yelling at the top of my lungs to take the trade. Everybody should be in the oil trade with a trailing stop right now. Take a target of 60 to 60, let's call it 60 to 60 and a half is your target zone. Aggressive traders could wait and squeeze a little more out. More conservative traders, I would take it off at 60 and see what happens. Let the market tell you what to do. Maybe there's higher prices. Like I said, it could be up to 64, but let's say you're playing the futures contracts, and I'm making it up. You have 4 contracts. At 60, you got to take 2 off and trail your stop for the other 2. Okay, if you have 2 contracts, take 1 off, trail your stop for the other 1, and see if you could squeeze out 64. It's up to you, but you never let a winning trade turn bad. But this is picture perfect. I mean, this has been here for a while. We've been talking about it, been telling you exactly how to play it. Everybody and their brother should be long oil as far as I'm concerned. Okay, so TLT. Here's another one. Put a line in here the other day, told you it was, and we bought it back. We bought this back here. We rallied up here, sold it. Now we bought it again today. Okay, 125.50. Didn't put out a trade alert, but just bought it for the portfolio. And I told everybody to buy it here. I mean, I had this line in here, told you what was going to happen, said it was bottoming yesterday. We went a little bit lower today, but then we reversed. So this is a great sign. This is a doji candle. Today you had what's called a reversal candle, right? We went down and we finished near the highs of the day on volume, more volume than yesterday. Which was more volume considerably than the rest of these days here. So all the signals line up that we should get a good, nice, solid, healthy bounce in the bond market, lower rates, higher bond prices. Again, this is another one. Bang you on the head, take the trade. You don't need anything else except all these indicators that I'm giving you. I'm putting the lines in the chart. I'm giving you the prices. The equities and the markets are hitting the prices and they're bouncing from the prices. So you can see, I mean, I don't know how many times you need to see them hit these purple lines and bounce off of it. When 3 guys tell you you're drunk, go take a seat. All right, let's go to the dollar. In the zone, okay? We just creep a little lower today. That's okay. We're in the zone. If we came down to the bottom end of the zone, that's okay. If we broke the bottom of the zone, what's the next level of support? You'll find support right here at 93. Okay, so either way, I don't really care. I know what's going to happen. I'm going to show you a longer-term picture. We're going to zoom out in a second, and I'm going to show you why that this action isn't scaring me, but it's actually healthy. And here it is, okay? Nobody wants to be long when prices are going down, so we always say, well, it's healthy pullbacks. But this one is, and let me show you why. Okay, let's go all the way to the monthly chart, all right? Now, here's what happens, okay? Hold on. Let me just bring this down a little bit. Okay. See this line here? This was our pivot high that we said would be formidable resistance, and then the market did back off, and it was basically 100 cents on the dollar, right? That was pretty obvious. Any junior technical analyst in training within the internship in his senior year of anything could have said that we would have saw a pullback at a big even round number of 100 cents after a move like this. That was the easiest trade on the face of the earth. Okay, so the second one is here. This is a monthly chart, and here's what you have. You have this downsloping line, and what this is their inverse head and shoulders pattern. Remember Yelp? Okay, Yelp. Check this out. Okay, see this? This is the monthly. Let's go to the week. Let's go to the weekly on Yelp. Okay, you see this? This is very, very clean. Okay, you see the dollar on a monthly basis? Okay, it's not as clean as Yelp, but it's the same chart. Okay, it may not look like it to you, but it's the same chart. It's just not as clean. It's more choppy. Here's your left shoulder. Here's your head. Okay, and here's your right shoulder. Okay, we busted out past this neckline. Okay, and we went up like a rocket. Now we're coming back. We could conceivably come all the way back to test this trend line. And if we did, you would have the same scenario as Yelp. If you went back down here and closed the month below this line, trades off, patterns busted. The 105 to 110's off the table. If you came all the way back here and repelled, and this repelled price, and we went back up, 105, 110 in play all day long. Okay, that's just the way it is. Is it going to come down to test this line? I don't know. I don't think so, but anything's possible. But this is a good, healthy monthly reversal candle, so I can't rule out the fact that there could be more downside pressure in the market in the month of May and even beyond. But I think we will see bounces along the way, and right now we should see one. That's what my work tells me. Okay, folks. Hopefully it's helpful. I know I'm giving you a lot of information. Hopefully you're taking notes, writing it down, and I hope you're learning. Learning is the key. All right? I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.